Mike Tedeschi, portfolio manager over at Perspective Wealth Planning. I'm going to zoom in on an hourly time frame here at the S&P 500 to get us started. Friday, the last hour of the day, we saw a huge run up heading into the weekend. This very big bounce from 380 to 390, and we followed through yesterday all the way up almost to that 400 level. We had a 2% up day to start the week off. Everything looked really good, but after the bell yesterday, the market has fallen substantially, down almost 1.5%. The NASDAQ, which I'm going to come in and take a look at next, is down 2% from yesterday's close, and this was all on the backs of Snapchat. Snapchat issued guidance well below what the street was expecting, is down almost 40% this morning. And the reason why this was such a concern was they cited deteriorating macroeconomic conditions. Companies were spending a ton less money on advertising, and this sent the majority of the tech sector down substantially last night. And so I want to take a look at a couple different charts here today. We're going to take a look at Snapchat, Facebook, Pinterest, and also Google. So Snapchat closed yesterday at 22, and I'm going to go ahead and put this level here in on this chart. Going all the way back to 2020, this was the breakout zone in June for Snapchat. It is now well below that zone. And in fact, if we back this chart up just a little bit, we are trading back now almost down towards those lows from the coronavirus panic. So we have undone the breakout, and you can see this level at 20 is a major level for Snapchat, going all the way back to 2018 and 19. You can see it again 2020 before we finally get the breakout. So the fact that we're all the way back down here is a major concern for this stock. The next real level of support really comes back down towards those all-time lows in between $7.50 and $5 if it cannot hold this $12 zone. So we're watching this very closely. Now, Snapchat caused a big sell-off in sympathy across a lot of the major tech companies. We're going to next take a look in at Facebook. Facebook had that big push to the downside below that 180 zone on earnings, reversed that back up, stopped that huge sell-off that we had been seeing. However, since then, again, we still have lower highs that are in play, and now we've got a gap down here below this important key level. Close underneath 180 does open Facebook for that possibility of more downside movement. The major COVID lows are right around 140. This is a big break lower. Facebook down about 8% today. Pinterest. I'm going to clear all these drawings off so you have a fresh chart for today's video. But Pinterest has continued to make lower highs and lower lows now for quite some time. Some people might have thought that we were starting to get a potential area of support in at this 18 zone because we pulled back into that going into earnings, made our bounce, tested it again, held, and pushed back up. But we're gapping down today below that, minus 20% on Pinterest. We extend this out to the left. You can see the importance of this whole range all the way down to about 15. Anything below that brings that all-time low of 10 back into play. And last but not least, let's take a look at Google. They get a lot of money from ad revenue, and in sympathy, they're down 6.5% today off of that Pinterest news, making a new low for the year. All right, it took out the lows from a couple of days ago, and it looked like this was going to be kind of a potential false bottom. It rallied back up above that 2200 level, which we showed as a major important level from the breakout last year. That's the key that Google needs to get back up above. Now it's trading right around that 2100 mark, and any push lower brings the 2000 level into play. And then below that, our next level of support really comes back in at the 1700 zone. Let me back this chart up and really take a look at it. In a larger time frame, you can see the importance of these levels. All right, so now you've got major tech companies really breaking below some of those key levels when it looked like we might have a little bit of respite here based on the bounce that we saw across the board in on Monday. Bottom line, this market is still under a lot of pressure. We will get these 2% rally days consistently throughout a bear market. we have to see follow through to the upside. And right now, any little negative information the market is taking and using that as a reason to liquidate stocks. So that is a very concerning development that happened since last night. As always, I hope you guys found this content useful. If you got any questions, feel free to reach out to me at mtedeschi at perspectivewealthplanning.com, or you can give me a call at 814-580-9881. Stay safe out there, guys. I'll see you tomorrow. Take care.